The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon. And let's see, today is, I kept getting that wrong. I even got it wrong this morning. It is May the 21st. Kept thinking I was a day ahead. May the 21st. Isn't that nice? I get an extra day because I thought it was a day behind. Day ahead. Day ahead, day behind. Who knows? Dow's up 13, S&P's unch, and we've got, now this is going to be interesting because Apple, a lot of talk about Apple going on right now. It's down 261, holding up quite well considering all that tax talk. It's at 440. So the comp index is down 1 at 34.94. You got gold down 18, the futures, at 13.65. Silver's down a minus 44 at 22.14. Platinum is down 37. High-grade copper is down $1.20 at 33.3. And crude oil is down at 96.13. Bonds are down minus 6 ticks. And the dollar is up 29.30 seconds. Let me just run a bunch of the things that I want to get out of the way. The E-minis, doji candle yesterday. If it doesn't break 1670.50 today, that will make a peak E. But a peak E means nothing because from a peak E to a peak F, the characteristic is to have a powerful down close followed by a very weak session the next session. Doesn't matter what time frame. Okay, got that out the way. The 120-minute chart, the E-minis, I've got a peak F or a peak C1, C2. It allows for one more pop-up. Now, this is very interesting. I mentioned to my subscribers in my opening call, it's my daily service, very extensive work that I do every single day based on the charts of the stocks we have, based on all the different indicators that I've developed over the year, all these proprietary ones. Well, proprietary in the sense, there's only one that I keep absolutely proprietary. And that's specific numbers on that particular index. Mostly, I discuss them. I do them during the show, in my Master Trader series, my webinars. But they are proprietary in the sense that a number of them are purely unique to my methodology. In fact, I would go so far as to say that there is no other technique that actually does some of what I do. And why? That's because of the methodology of counting each successively high peak and essentially grading them. And that just allows for different techniques to unfold, like the variations of the instant restart, where you can get an unconventional instant restart. You can get a flat-based restart, which is based on the characteristic of the instant restart. That can only happen at peak D. Find me another technique that chooses the fourth peak to discuss different techniques within that, and then the variations, and you can get an unconventional flat-based restart. So I'll be discussing some of these techniques live. Let me just see if I can go there right now because I need to do it right away. Yes, there it is. So you got Tom O'Brien giving a 2-part 6-hour training class for free. That's for all those who signed up to get their bonuses. That's the Tiger dollars. And so Tom, as a gift of gratitude, is going to do a 6 hours free training session for those people. But I'm going to be doing something that's a little different to what I normally do. The protocol will be a little different, but the show, of course, should be the same. What I'm going to be doing is meeting live with the Massachusetts area. I can come from anywhere you want. It's going to be very convenient. It's right here in Newton, Mass. Newton is maybe, it depends on how you go, but it's, I'd say, 6 miles from downtown Boston. It's part of the greater Boston area, just off 128. So at Newton Highlands, we've got a terrific venue at the Women's Club, one of the oldest women's clubs, right there on Columbus Street in Newton Highlands. There's lots of parking available. If there isn't, you can just pop out. There's the meters as well. Take a second just to put in another quarter or whatever it is. And who knows, by then, of course, in Newton, the prices might have gone up for those meters. Anyway, and there's eating places if you want to come early or stay late or whatever it is, because I'm going to be meeting with you from 10 o'clock till 1 o'clock. on Thursday, May the 30th. And in that session, what I'm going to be doing is I'm going to be going through some of the core techniques of the ChapmanWave. I'm going to be discussing them. The timing for this couldn't be more perfect. A week from this Thursday, we will know, we should know, whether or not we're in for a consolidation, whether or not we're breaking out to have a rip-roaring spiral into the 13,800s, which is we're going to know a lot. We're going to know what's working and what's not working, which sectors have now played their upward movement for now, and are going to take a real good breather. It's just, what a fantastic time. I'll do the show live, 11 o'clock till 12, the show that I'm doing right now. In fact, I'm in discussions right now with my wonderful engineer, Al, and Alan and Steve are going to be working with me to be able to see that I can synchronize all the peripherals, all those, with the laptop computer away from my office, how I can connect to get the best voice. I'm going to be able to walk around and ask questions from the audience, because the live Tiger Technicians Hour is going to be your questions right here in Newton, Mass. Now, what I love about when it struck me as what I did in San Francisco, why not do it here live and do it during the day? It's a big risk on my part, because, hey, we might not have anybody show up because it's daytime. A lot of people are working during the day. Turns out we've already got a number of people that are going to TFN, because the most important thing that you can do to help me, to help the sponsors of the event, the Women's Club of Newton Highlands, is to be able to tell them the number of seats they need to know what to prepare for and all that. So we need, and I'm not going to be able to do anything when I'm there. I want to be with you. I do not want to be signing people in and signing this and signing. No way. I want to do market stuff. That's most important. So please consider it if you're going to be coming, and I really want you to come. There are 3 reasons why I want you to come. One is I want to meet the people out there. I want to know who's there. It's just fabulous when I meet folks and I get be able to put a face with a name and a voice. So to me, that's really important. Number 2 is I love doing this live, because when you do it live, you go into areas that you normally wouldn't go into, because people don't really want to always call into a show. 877-927-6648 is the number to call. Excuse me. But when you're there in the audience, you just raise your hand, or you just button in and say, but wait a minute, what if the, and you get your question. And then a question that might be bugging you for ages gets answered. Like, I love, this is what's so wonderful about a Master Trader series. I get to answer that question immediately. Immediately. If you don't get the right answer, or the answer that you can understand, I'll do it once. I'll do it twice. I'll do it 3. I'll do it 4 times. And each time I do it, I come to it in a different way. I love teaching. It's an exciting thing to be able to see the light go on in the person who's asking the question in the eyes. So that's important to me. Now, the third thing, you'll be able to meet people that are interested like you in certain aspects of the market. You might make a friend for life. It's a great opportunity. So I'd love that. Not only that, when we're in this one-to-one situation, very often I get ideas. People come to me and say, I've been using your ChapmanWave technique. Have you ever tried? For instance, in the den the other day, someone said to me the other day, hey, why can't we have a C1, C2 on the downside? I said to myself, good grief, of course you can have it. I thought of it in other ways, but I never made it such a simple question. That's the M pattern. Oh, sorry, the H pattern we're seeing in the GLD. It hasn't broken the low yet. So that's the same sort of thing. Is it C1, C2? Is it going to turn into an up arrow? Are we going to retest it? Are we going to break it? Lovely question. So, and with that said, let's go straight to, thank you, Halo in the den. Halo says, Basil is a great teacher live, must attend his Master Trader class or seminars. Thank you very much. I do appreciate that. So let's get to the market. It says right now, let me get rid of this. It's out of the way. Here we go. Click. So the E-mini is in leg E in the weekly chart. That's the S&P. The daily chart is in E with a possible peak E. But look, this is the most appreciable thing that you can get when you learn to use certain of these techniques. When I when I looked at a particular chart the other day, using the art of the chart, I thought, wow, that's great. It came up as a Gartley. And then I looked at it even closer, and I said, no, wait a minute. There's a chance that this could turn into a butterfly by expanding. So far, we're on the right track with that stock in the analysis, and I'm going to be watching. So what I wanted to point out here is that there are certain techniques that I use that are locked in concrete, if you can lock in concrete. And that says that there are certain characteristics of the stochastic that if they are met, you have to change your thinking. And it helps you to either stay in the trade longer or avoid going short. For instance, we went short the Dow a few days ago. So far, that trade has worked to the point where we are down a little bit, just a little bit. But I regretted doing it almost immediately because I said, oh no, the stochastic is holding until the stochastic starts to fail. I think I'm early. Well, if you use up time and then that particular tool, indicator tool, starts to fade, then you can say, okay, I've hung on. I think I'm going to be okay. But if it starts to strengthen or it holds, then you have to have another strategy. So that's very important. So here we go. In the E-mini 120-minute chart, I told you what's happening. Now look at this. This is, to me, absolutely fascinating. You've got a stock like Home Depot. And Home Depot absolutely is the star in its field. It's going in a leg F/C in the daily. I'm sorry, in the monthly. It's building materials, appliances, home equipment or whatever you need for the home, electronics. It's just everything. And they've been the absolute stars. Now look what's happened. The monthly chart is in leg, it could be a brand new leg C. I'm calling it F/C right now. I don't even have to make a choice. I don't have the stock. It's nothing technically wrong. But look at this. It's extended in the way I measure my Fibonacci extensions to almost the 261%. That says, having gone to that level, there's a chance that it could go a little higher, but it needs time before it can do it. That's number one. Number two, the weekly chart is showing in the technicals that it is just about to become very overbought. Yes, it could go a little higher, but in this area of 78.44 in the weekly chart, leg E, it is starting to show signs that say the 9-period moving average of 74.41 and it's trading at 78.39 right now, up 163. That's the level that is probably going to be hit within the next 2 to 3 weeks. If it closes, Home Depot closes under 74, then you've got a timeout of time. I will not know yet, or at that point, whether it's price until I see the stochastic begin to fail. And right now it's at 93%. That's fantastic. The daily had a diversion between the technicals and the price spiraling, gapping up today. I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rose, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman and Tiger Technicians Hour. Dow's up 16, S&P's down 1. Now, I have to talk about a couple of things. So, Home Depot, I think right now is probably making some kind of a short-term top, gapped up, all-time high. We'll see what happens there. I do believe that right on the short term, upside is limited. Now, I had a question from one of our denners, folks in the Tiger Den. Just a fabulous meeting, folks. If you're interested in, just finding out what people are doing and thinking and saying, etc. So the question is, when I look at TripAdvisor Inc. Online Travel Digest, I call it the Digest. I don't know what the official title is, because they just have so much information. TRIP, trading at 62.12, down 51 cents. Now, this is one of the reasons why I'm becoming more cautious. Even though the stochastic's at 91%, which is fabulous in the daily, if you're looking at my charts, that's the one on the left. And I'm just going to look at something here quickly. I'll put it on here just to see TRIP. I just want to check a couple of things every once in a while. I like to do that because I wanted to see. No, I think the white one does fine for what I'm wanting to show. I'm going to show you 3 different technical tools. That's the 9-period moving average right there, the black moving average, thick line. That is the fast moving average of the MACD, the moving average convergence divergence, and that's the slow one, the red one. So green is fast moving always, and red is slow moving. Look at the distance. That is so high. That says that Trip is doing fantastic. Now, if we're going to ask if J and J was long or short looking at it, maybe looking to short, whatever it is, So the daily has had this tremendous spike. 1, 2, 3, 4, 5, 6, 7, 8, 9 sessions with higher highs. That is really important. That's high bars, the whole bar. And the stochastics were at 91%. To get down to 79%, which would be a negative, that's going to take the price down to the 58.88 level with the 9-period moving averages, or maybe 59. But whatever it is, it says there's a lot of cushion for support on the shorter term. The weekly has extended a little too far above the 9-period moving average, having made a V-shaped breakout, like the cup and ladle. This is a V-shaped cup and ladle, V-shaped cup. But there was a stochastic squash, and that was very important because it takes you to at least the C and then the MACD, the moving average, fast moving average has to keep going. And it's done that. But now it's getting close to a point where it says it could take a bit of a breather. But the monthly is still early. It's only in leg B, and I anticipate that it will go to a D. So what do? I'm looking at this, and I'm saying, okay, I'm going to grab the 120-minute chart, just do a real quick. That's the low bar. So this is A, B, C, D, E, F, G. No, can't be. So here we go. We're together with you live. Oh, I already did once. There we go. From there, it made a peak E over there. Here, and I'm putting this up as a candle. There we go. Okay. So that's A, B, C, D. That's the low that counts, that one there. At 53 round, a close of 51.72, 51.76, and 51.81. So that is, with a round number, that's really great. So this is A, B, C, D. So I have to consider that if this is that, the high bar cannot be the low bar except in an instant restart. So that is not a new high. Yep, it is. Okay, there we go. So this is E here, and then it goes A, B, C. That's the way I'm doing it for now. And I need to just double check one thing here. Is that parallel highs? 37, 38. So I'm going to call that an instant restart because it fits perfectly what I'm doing right now. Because I don't want to have to form fit, but I want to be able to use the techniques that are available to us to be able to correct it. There it is. Okay, I've done a little work on the 120-minute chart. I'm calling that an instant restart right there. It's an unofficial one, unconventional. And that says that it should come back, that CHIP should come back to this price right here of 57.42 at some time, maybe over the next week or two. But in the meantime, it's acting very well on the daily. A 120-minute chart is suggesting that today's high of 63.22, if that is not taken out in the next two sessions, but instead it actually drops below 59.90, 2 points lower, that's going to suggest that it has made at least a short-term top. And I would only go one step at a time. Now, the question is, I don't know if the question is, should I short it? I'm long. What should I do? I'll do this. When I get back, I'll talk about it because there are a lot of stocks in exactly the same situation. So I'll be right back at 877-927-6648. We'll be looking at TripAdvisor straight after, continue looking at it. Dow's up 14, S&P's down 1.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at tfnn.com. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit, and on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tag Technicians. Now the Dow's 34. This is what I meant. What I've been telling subscribers is this. When you go from, I didn't even have a sell signal because I had to get a lower high bar. And we haven't got the lower high bar because today we made a new high, but it's still within the confines of that up channel resistance. That's number one. Number two is sometimes it's better to wait for the peak to form than to anticipate it, because you can go up 3, 4. We saw nine bars in, was it Home Depot? It just keeps going up. So anticipating sometimes is okay if it really works, because what you've done is you've anticipated and the next day it's down. But the most important aspect that I can give out here in terms of techniques is that you won't have a sell mode in the market until you have severe declines, and that every bit of news is treated as bad news. Good news, bad news, the market just keeps going down. And it has to happen day after day after day. That sets in place the whole thing of a sell signal to a sell mode. So at this particular point, you got to be thinking that maybe, this is pretty darn good action considering. So, TripAdvisor, I wasn't able to determine whether or not a person was short or long. All I'm going to say is if you're going to go short, it's a quick trade. It could turn out to be a much better trade than a quick trade. But I don't really have a signal yet to say that it's tanking. It's just made a new leg E up. TripAdvisor is the one that went 9 days straight up. So, and the weekly chart, yes, it's extended. So I'd be very hesitant. If you're long, what I would recommend is in this area, you might want to consider taking a little bit off that will be designated back into the stock because the monthly is so powerful. So that's the way I would look at it. And what levels am I looking at? Between 59 and 57. That's going to be the major support over the next week or two. Of course, if it goes up to the 64.50 area, you can raise that by a point or two. But at this point, I really think it's got fairly limited. Now, what if the stochastic holds in the 91%? Then I'm wrong. This thing will be going and it will be screaming into the 67 to the 69 area. If this stochastic holds in the 91, you want to see that. That's fantastic action. That's the equivalent of 6 or 7% on the downside when you're in a major sell mode. Okay, got that out the way. Now, a couple of questions here. The GLD. What about the GLD, I've been asked? Well, the GLD, as far as I can tell, yesterday entry point at the open was a perfect entry. Why? Because it held 130.51. It went to 131.02 in the GLD. Now, this is the 26th day, I believe. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. 1, 2, 3, 4, 5, 6. Yeah, the 26th session. You remember when I was discussing this on air back on the 15th of April, I said that the low today, I said at 130.51, if I'm correct in looking at this as a ChapmanWave climactic volume spike low bar, you should be able to go at least 28 bars before you retest that low. If you break that low before that, it's negative. You can break it afterwards, but at least gets you through to the 28. And what I said is it's time and it's not price. Now we get to something that's really interesting. If, perchance, the low yesterday was a successful test of the H pattern by not breaking below, now you could start a move that takes you to that M pattern with another H, but it's going to be really, really important for the GLD, the Spider Gold Trust, to break above 139.16. It sounds like 7 points, 6.5 points, far away, but these things sometimes move very quickly. I suspect it's not going to be moving quickly, and then in fact we could get some kind of an arch formation, but here's the killer. The pattern that was forming in the monthly chart with that Roman candle right there from last month is saying that there's been so far in May a successful test of the April low, but a lot of things has to happen in the gold contract, the gold charts, and the XAU and all the other areas of the gold for this to become a sustained rally that takes you to a higher high above the high of this month, which is 142.81, to make at least a gray peak A before we come back and retest again the lows at some point. So I just want to make that clear. A close below 130, a close below 129.50 will say to me, uh-oh, real problems. We've got very limited upside at this particular time. Now, the dollar index. The dollar is at a peak D. But the stochastic's at 89%. Not as good as the 93% we'll be looking in some other areas, but 89 is good. And the MACD is very strong. So what it says is the dollar could have a consolidation. It could even make a new recovery high. But it's saying there is a floor. It's at 84.03. There is a floor between 83.57 to 83.32 that's going to be absolutely important, and 83.02. Those are the three levels. If it breaks into the 82s at this particular time, then I believe gold will have more of a rally. At some price and time to the upside. And they can go for another 12 to 18 sessions to the upside, maybe even longer. I don't know yet. I'm going to go one step at a time. So I thought I'd do that because that was important to me, to be able to look at it. Now, another aspect of the chart patterns that we always look at is that cup formation. Sometimes the cup formation makes a little bit of a handle. So it's not really a cup and handle, because the left side high didn't even test, in this case, the weekly high of July of back July, the week of the 27th in 2012, 84.10. It's gone close when it goes to 83.49 in the week of 5th of April, and then it pulls back. So this, in fact, is part of the pattern that I typed in. I showed here, left side, let me put an LS, left side, right side. Now that's very important to me because this move here on the move, let me explain something. That move that occurred back in May to July, August of last year in the weekly chart, that was like a ChapmanWave right arm extension. What's a right arm extension? In the ChapmanWave methodology, this is a right shoulder pattern. I want the right arm extension, and that is right there. The right arm extension is a technique whereby you can go to a high, but in fact you get failing. This is chapter 20, chapter 18. Right arm extension starts on page or slide 343. So now what's important about this, you see the pattern there, the pattern here where it went up higher, but it then failed. It went to a D and failed. At this particular point, you've got the same thing with the right arm extension. The difference here with the dollar is that the MACD is still holding well. Stochastic's at 86%. If that stochastic starts to fail towards 83 to 80%, you will see the dollar pull back under 83.02. So far, dollar's acting very well. Gold is actually acting very poorly, and we'll see if that relationship is going to change. Now, I was asked something about the VIX, the volatility index. I'm going to go to the black chart here. VIX, because I've got all the work done. It looks beautiful. The VIX is at 13.06. If the VIX can go to 1520, the 200-period exponential moving average, on any slide in the Dow, it's at 15,367. If the Dow breaks 15,002, no. If the Dow breaks 15,220 to 15,170, that whole support area, then you will see the volatility index turn the 15.20 level into a support. At this point, at 13.06, it's just saying buy the dips, buy the dips. You know, well, one of the easiest indicators in the world, and you know, I should never have shorted as quickly as I did, although it could turn out to be right. It was early in the techniques. I just jumped the gun. I should not have done that. So that's it's not a big deal at this particular point, but I'm saying it could turn into it. Now I want you to take a moment here. So the volatility index is still low. The weekly chart saying no strength, and the monthly chart is saying, hey, that 15.14 level in the monthly 9-period exponential moving average, that's going to be key, and we haven't got there yet. When we do, we're going to be looking at selling. Now I want you to talk about Toll. Toll Brothers, just a fantastic stock. We had this a long time ago to great profits. Didn't manage to get back in, but it made a peak F top in the daily. The weekly chart has got a failure pattern. That's a potential right arm extension. I think that the housing sector is going to take a bit of a breather here. It's just my opinion. And how would I know that? Well, if that weekly chart forms another U pattern, it might be a V, but it's like a U pattern, keeps double topping, then the support, it's a 34.547 TOL down to $1.17. Then we should be looking at 33.75 as very important support. So now let me just show you this. Toll. I want you to go to, yeah, I want you to show the chart there. You see the way the technique here at a peak F top, doji high, 38.36 back on 28th of January. Look how the technique here worked, because you kept holding very well, but the price then slipped under the 9 EMA, and then it made almost like a double top, a cup pattern at the top as the technicals were failing. Are we going to see the same thing here? And I suspect that peak F, patterns repeat over and over, at a failure to break 38, 36? I think so. So I think that there's time for a consolidation in the home builders. Lennar is another one, LEN. It's made a peak D. Let me just see, did that go to an E? Yes, it did. Yeah, both of them have the same kind of pattern. So it's making a peak E right here. That was yesterday's high. I'm not going to put a down arrow yet. I have to put a red plus sign because we haven't got the close of the day. And at the same time, let me look to see. Maybe they're round numbers. Maybe they're other things. 44.40 was the high. No round numbers. Okay, well, this is interesting because the daily's at a peak E. The weekly is at a potential peak E. And there is a fading technical aspect with the MACD so low. So this is going to be worth watching. So how am I trying to sum up this whole thing? I think this is a period for a bit of caution. You can have isolated stocks take the markets a little higher. I think you're starting to see the wear and tear in, look at a stock like Celgene, SCLG. Yeah, this made a peak E top of 131.82. And was that surrounded by round numbers? No. So it's just a pullback, a sell signal that's actually now about to go to a sell mode in the daily. But the weekly extended up. Oh, this is going to be good. Oh, boy. So this has, I'm going to call it G for now because it meets all the criteria of the MACD that I like to teach and to talk about. So at this point, I've got a G. I can't even put a down arrow yet, but it looks to me like a G. If it goes to one new high next week without going to one this week, that'll be D. So either way, I'm looking at it and saying, oh, okay, you're a little extended here, Celgene. You've gone vertically up in a leg F/B in the monthly chart. I think that there's a chance that this takes a consolidation. Where would it consolidate to? That doji candle, the first doji candle has a low of 114.52. It's trading at 122.84, down 28 cents. So I think it's consolidating, and that goes together with a whole bunch of stocks in the IBB because it made a peak D in this beautiful up channel. See, that's the way I like to use up channels. The green line would have said breaking out very positive. The red dash line says the inside track. There's a ChapmanWave technique. That's the repellent zone. Now it's sitting in the propellant zone. Will it hold? Because if the IBB, which is the NASDAQ iShares Biotechnology ETF, if it takes out, it's a 180, exact, up 24 cents. At any point in the next week or two, if it takes out 179, it's the first time it's broken that up channel support, and then I think it comes down deeper. So I'm very cautious on this sector. Okay. So 877-927-6648 is the number to call. I have, when things are quiet like this, I have a sneaky suspicion that there are a lot of people that are on the wrong side of the market at this particular point, and they're just totally confused. Now, what is the wrong side? That says that in their own portfolio, they could be weighted more to the long or the short or whatever it is, and it's just not working right now, and they're kind of frustrated. They're waiting for something to happen. The next 150 points up or down probably will do it. And the people who are short say, oh, man, I've shorted every day for the last 13 weeks or something, and it barely works out. So there's a lot of frustration. And the best thing is, if there are stocks that have held really well and are still looking good, and you've been in for a long time, my suggestion is treat part of that as a core position, and you can trade in and out of the smaller positions. Don't use up all that trading power to lose everything you gain. But you could have a fairly decent set of swing points for 3 to 5 days, and you could be in and out of that same stock. You could be short a stock you're long. There's no problem as long as that's a short-term trade. I'll be back. Basil Chapman, 877-927-6648. Dow's up 33. It's up. S&P's up 1. And
recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. A couple of things. I was asked about the GLD. I spent quite some time on the GLD talking about there it is. About the H pattern that's forming, and so far it has to be thought of as a successful pattern. So that was at the very beginning of the show. Now, I'm just showing a chart here. This is the UUP, which is the dollar bull. It's called Power Shares DB US dollar bull. You know, every time we have a great deal of information on the front page about the direction shares, power shares. It's really important to read up on that. But whenever there's music on any commercial that I find myself suddenly grinding my teeth and grab the remote and shut the sound off. It is the cues, the spider, and the direction shares. And what horrible music have you got there? It's so electronic. It's so loud. It's terrible. The shares themselves are great, but the music is unbearable to my ear. So look at this. The SPY's gone to leg E. The dollar feels like it's fantastic, but all it's doing is it's going back. Could break out this time, we don't know, but so far all it's doing is just going back to this very strong resistance area over there that it keeps going to. The TLT is in a trading range, just like the dollar is being in trading range, so the bonds are being in trading range. Bonds will break down, the TLT will break down if it takes out 113, 114.70 as a support. If it goes to 113, and the UUP, that's the dollar bull power trading vehicle, will break out if it can decisively break above 23, I would say 23.80 to 24. Then it's broken out. That's important. Now when I go to, so look at this, and here's bonds. I thought I'd just spend a few moments here. We've got Travis in St. Louis. Hi, Travis, how are you? I didn't even see that. Oh, I hope I got time. Travis, how are you doing?
Hey, Basil, I'm doing fine. How are you, man?
I'm doing well, thank you.
I know the last couple times I've called in, I've been talking to you about the biotech area, and I've actually got another one that I've owned. I know I talked to you recently about Cadence. I wanted to look at Insmed. I still own some shares in this one and was considering lightening up in this one as well. I just wanted to get down on that.
Let me just get this. I've not got it notated. It's called Insmed, INSMED, Inc., and biotech, as Travis says, is trading at $11.34. It's down 29 cents. I don't want to do this quickly and give you incorrect information. So let me just 720 A, B, C, D. So peak D in the daily, the technicals are all very good. There's one technical indicator that says it's getting a little overbought, so you've got to be careful. The weekly, A, B, C, leg D in the weekly. I've got a lot of the biotechs in D's and E's in their weekly charts, and I'm thinking that the sector itself is kind of vulnerable to something. I don't know what yet. So, yeah, this is what I'm going to tell you to do. Lighting up is the thing right now. So I'm going to suggest one is just to lighten up a little bit. There is time because so far the technicals are good, and I think the 120-minute chart, A, B, C, also a D. Here's what I'm going to recommend. Lighten up a little bit, but call me tomorrow. Let's make it, if you can, make it the first call. And then I'll have notated, I've done all the work that I need to do. I don't want to just give you some glib kind of answer because there's an inverted Roman candle in the monthly from the June of 2009. And it says at some point within the next few months, if it's able to break above the open was 17.40, it's trading at $11.32, INSM. Then it suggests that over a period of time, I need to look at this. Oh, this is a stock that was once at 199.38, so it's come down a little bit. Then at some point, it's going to try to retackle that particular high bar. So just lighten up a little bit. Let's look at it again. I think you have time here because there's just enough residual strength to at least keep it propped up above 11.10. Down below 1036, you don't want to see that because that could be a real quick slide to the 990s. So just to lighten up, and let's look at it together again tomorrow, okay?
Thanks, Basil.